Winning the lottery brings an immediate rush of joy. But the instant it hits your account, that money triggers a dense, unforgiving legal maze. Our stance here is strict. The lottery is purely entertainment. Buying a ticket is a game of chance, and it should never be treated as a viable financial plan or an investment strategy. The danger starts the moment you hold that massive ceremonial check. Getting the payout feels like the end of the journey. You have the money, so you assume your obligations are over. When the distributor cuts your check, they deduct taxes upfront, a process called TDS. Many winners think this automatic deduction means they are squared away with the government. That assumption is entirely false, and relying on it triggers severe legal penalties under Section 276cc. You still have to file a formal declaration. The government categorizes windfall money under very specific, rigid rules. Ignorance of these laws offers zero legal protection, and failing to understand them is the fastest way to lose your wealth to fines. Most taxpayers are used to a sliding scale based on their income, complete with standard exemptions. None of that applies to a windfall. This animated diagram breaks down a hypothetical 10 lakh prize. Under Section 115BB of the tax code, winnings face a harsh 30% flat tax right out of the gate. The government takes 3 lakh rupees immediately, based entirely on the gross winnings. Then, a mandatory health and education cess is applied on top of that. That extra 4% bumps your effective tax rate to an inescapable 31.2%. Out of a 10 lakh prize, you are left with exactly 6.88 lakhs in hand. You cannot offset this hit. Section 58 expressly forbids you from deducting the cost of your winning ticket, your life insurance premiums, or any mutual fund investments from this taxable amount. Because the law taxes the absolute gross amount won, the burden is fixed. Your personal expenses simply do not matter to the tax department here. With the math out of the way, we have to look at the required paperwork. You cannot simply log in and start your digital filing blind. First, you need an official tax receipt directly from the prize distributor. This is Form 16A. You must actively secure this document to prove the distributor withheld your taxes correctly. Next, you log in to the government's Traces portal to view Form 26AS. Think of this as your annual tax passbook. It verifies that the distributor actually deposited your withheld money with the government. Check the deductor's TAN number and the exact prize amount across both forms. If those specific numbers do not match perfectly, your tax return will stall before it is even processed. Salaried taxpayers usually rely on the standard ITR-1 form. If you won the lottery, you must throw that form out. You are legally required to download and use the much more complex ITR-2 digital form to handle these entries. Looking at this interface map, you have to bypass the basic salary sections entirely and locate a specific branch. You need Schedule OS, which stands for Income from Other Sources. This is where the most common filing trap occurs. People naturally input the net amount they actually received in their bank account. You must enter the gross price amount, the total number before any taxes were deducted. The software uses your inputs to calculate the final liability automatically. Entering the net instead of the gross immediately triggers a mismatch alert, inviting a formal notice from the tax department. Navigating the form and clicking Submit feels like the end of your obligations. It isn't. If you skip formally e-verifying your return immediately after submission, the entire document is legally invalid. Your filing effectively vanishes. Complete the e-verification. Download your ITR-V acknowledgement receipt and store it securely. By law, you must retain all physical and digital documents related to this return for a full 8 years. Indian tax mathematics are rigid. The rules do not bend. Operating with total transparency and maintaining flawless records are the only ways to secure your windfall. For specific timelines, verification checklists, and further tax education, read the complete India Lottery Guide at lotterysambadresult.news.